And so over the course of about a 3-week process, they literally taught me a number of key principles, concepts, systems. This is all, of course, before the internet. So all the stuff was being done over the phone.
Brad, welcome to the show today.
Thank you so much. It's a pleasure to be here with you, Michael.
Yeah, it's great to have you here. You're so accomplished. You've raised so much money, $2 billion. You've led teams that have raised money. You've founded a school related to raising money. So you've a lot of experience raising money from high net worth individuals. I can't wait to kind of unpack. Sometimes, though, as you know, when you hear $2 billion, it's this giant number. And people are like, yeah, that's great, Brad. Good for you. I don't know how I'm going to relate to that. We'll get to that. But how did you get started with raising capital?
It's really interesting. When I actually went off to school, I went to college with the ambition of being an architect, and I wanted to use the architectural skills to become a real estate developer. And like a lot of kids in school, I was looking for a part-time job. So, I get out the paper and I'm just starting to circle ads, and I'm faxing and sending resumes all over the place. And I get a call one day, and it was actually from a small oil company in Austin, Texas. I was going to UT. And the receptionist said, hey, we got your resume. The CEO of the company would like to interview you. And I'm like, great. So I went in, all suited up. And this guy that was the CEO of a small oil company, for whatever reason, took a liking to me. I was a 21-year-old kid. And he said, I really like it, man. You're smart. You can think on your feet. And I'd like to offer you a job. And I said, great. What am I going to be doing? And he said, well, we're going to teach you a system of how to get on a phone and basically build trust and establish relationships with high net worth individuals, and ultimately get them to the point where they're comfortable moving forward and investing with us in our oil and gas drilling programs. I said, great. He said, you're going to be paid a commission. You'll be paid real well. And so over the course of about a 3-week process, they literally taught me a number of key principles, concepts, systems. This is all, of course, before the internet. So all the stuff was being done over the phone. And I was just working maybe 12 to 15 hours a week, between classes, going in after school, taking advantage of the couple hours between Texas and California, reaching out to people on the West Coast. But I was making a pretty comfortable income for a college kid, $80,000, $100,000 working 12 to 15-hour weeks. And I'm like, my God, why am I going to school to graduate with a diploma to go out in the workforce and maybe, if I'm lucky, make 60 to 80 working 40 hours? So I took that and I went to work for a second company, Michael, doing exactly the same thing. Unfortunately, through one of my investors that was a petroleum engineer, we uncovered some misrepresentations and fraud. And so when I resigned and organized a class action, which we ultimately prevailed in, my entire investor base turned to me, and they had never met me. They didn't know I was a 23-year-old kid, I don't think. And they said, well, Brad, what are you going to do now? I just saw this huge door of opportunity open. And so never having drilled an oil well, not knowing the first thing about building a multi-million-dollar business, but knowing I could find people like a good attorney and a good CPA, I printed up some letterhead and business cards, and on the door, Third Coast Petroleum, and there I was, just raising literally millions of dollars, hired people, and over the course of a decade, we built a pretty nice, sizable company with drilling programs here in Texas, Oklahoma, and Louisiana. But that's largely how I fell into it. I wasn't looking to raise capital. I actually learned at a very young age, and it just stayed with me my entire life.
What was it that your early employer saw in you when he hired you and said, I'm gonna hire you, and you're like, for what? He obviously saw something in you that he felt you would excel at, and you didn't even know how to do it. What is it do you think that he saw in you?
I think number one, probably a little bit of confidence and cockiness. I won't say that I had a chip on my shoulder, but you definitely need to be confident. And the other thing I think also was the ability really to establish relationships. That's something that I've been really gifted with and good at most of my life. And I largely attribute that to having to uproot myself as a kid and basically, make friends and build relationships, because my dad was a CEO and an entrepreneur. And so about every 3 to 5 years, we were uprooted and, we had to move. And so I think it was just that ability to very quickly build relationships and trust with others. Maybe that's what he saw in me. The other, I think, was just I was, energetic. I wanted a great opportunity, and he just saw in me something that I guess he was attracted to, much like I've seen in others, obviously, that I've hired into my organization. But I think a lot of it was just the confidence, and just the ability to think on my feet real and just be real sharp.
So confidence, I think you said building relationships several times.
Yep.
And this was back to, you said before, internet. Were you doing this over the phone, in person? And then more importantly, how did you build relationships, whether it's in person or over the phone?
Yep.
Because you were probably talking to a large number of individuals, and you can't afford to spend days and months building relationships. So how did you figure out how to build relationships? I would say more efficiently, though you can't hurry it either. How did you, what did you find works?
Yeah. So it was all done over the telephone for the most part, reaching out to people. And what I've learned, having done this now for close to 30 years, and also, of course, doing it at the highest levels, raising tens of millions of dollars from, family offices, insurance companies, pensions, trusts, sovereign wealth funds, is it's more of a journey than a sprint. And I think what's made me successful and also teaching others is I've been able to take my knowledge and really systematize and codify it. And so as I teach people, I talk about key concepts and key principles, things like the 4-step blueprint, the trust sequence, the validation phrase. And when you're talking to a potential investor, what I've always really done is backed away and just tell them right from the get-go, right now, I just don't have anything that I can really talk to you about from an investment perspective. Here's why. So it's a little bit of the negative sell or the takeaway, but it's really just getting to know that other person. Psychologists have shown us that if you show interest in another person and really get them to talk about themselves, that's what developing a relationship is all about. And so, I just basically ask them, have you ever invested in something like this before? And they're going to give you an answer. Well, great. Tell me about that. When you invest, what are you looking for? Are you looking for growth? Are you looking for income? How important are tax considerations to you? What's your time horizon? And so it gets back to, what we call the KYC, know your client roles in the securities industry. But it's really, I think, uncovering the temptation. What's going to get that person to move forward with you as a potential investor? Because if you can uncover their temptation and find out why they're wanting to invest or what they're wanting to do with the money they're investing, you're 9/10 of the way there.
That's interesting. Let's talk about motivation when you're talking about, because people say, well, I want a return, or I want to hedge, or I want to get tax benefits. To what degree do you dig a little deeper with that person? Is that normally satisfactory to go with that answer, or do you try to go a little deeper, or what's behind that motivation?
Yeah, I go much deeper. One of the things I talk about is this thing called the trust sequence. Yeah, there's a great book that your listeners can go and Google. It's called The Trust Economy by a gentleman named Philippe de Koner. And in there, he talks about a sequence that takes place in people's minds. There's actually 6 steps to this process. The first is perception. When you meet somebody, man, they're checking you out. And, I like to say to the ladies, you get this a lot better than us guys do, because when that guy pulled up, the first thing going through your mind is there ever going to be a second date? But that's largely what it's about with a potential investor. They meet you, they shake their hand if it's a personal meeting, how you dress, the quality of your presentation materials, if you have a pitch deck, if you have a website, that largely dictates whether they want a second date. But the second step in this process, we call that temptation. That's where you're uncovering the need. That's where you're going deeper. And then after temptation, the third step is what he calls connection. Connection is the most important part, because at the end of the day, Michael, we know investing is all a relationship driven business. You got to build that relationship. You got to get the people to trust you. And then the fourth step we call validation. I always tell my students that we work with, you're largely wasting your time pitching or talking about an investment until you know that person trusts you. because the next step in the process is they're just going to say, oh, that sounds great. Can you send me some information to take a look at? Which you do. But then when you follow up and you try to close them, they become real evasive. They're going to give you every excuse as to why they don't want to invest. And it's not you and it's not the deal. It's largely just they don't know you. They don't trust you enough to physically write you a check. So if you stop and you step back and you build that trust and you allow the other person to really get to know you, you're going to be much, much more successful. You're going to raise considerably more money, and you're going to have much greater conversion with regards to the people you're talking with as it relates to the people that are ultimately writing you checks.
Well, you're right. I mean, many situations you're just dying to make the pitch. You want to close
exactly.
the person
that's
down.
The mistake that most everybody makes. They got the deal.
Yeah.
Or they've got it now under contract, and now they're in capital chasing mode, and they're so excited that they start pitching the deal way too prematurely in the process. Why? Because they need the money to close the transaction. And so, the best advice I give to people is, look, slow down. And a lot of course, real estate people finally realize that maybe it's better for me to launch a fund so that now I have something to talk to investors about 365 days a year. The fund essentially replaces the deal. And now as I'm raising money in a fund, I hopefully have enough to close on a property or close on a deal when the opportunity presents itself. But the biggest mistake a lot of people make that are new to raising capital is they just pitch way too early in the process. And like I said earlier, that person's going to naturally say, yeah, send me the stuff. I'll take a look at it. But ultimately, they're not going to write a check when it comes time to physically close them.
Now, give me an example. What should someone say to build trust before the pitch?
Well, it's a lot of just really getting to know that person. But the validation phrase is something that I've worked on for many years. And it really is a subconscious acknowledgement that that person now trusts you to move forward in this process. So remember, all along, what I've been basically telling this person is, right now, I just don't have an investment I can share with you, Michael. I wish I did. But the validation phrase literally takes place at the end of the second call. And so in the first call, I'm asking questions, I'm digging deeper. The second call, I'm digging deeper. And usually at the end of that second conversation, I say something like, Michael, like I've shared with you right now, I just don't have an investment to share with you. And the reason is I always like to give my existing investors the right of first refusal on most of my new deals. And so as a result, they tend to fill up pretty quickly. But what I'd love to do is I keep a list of people on my desk that have expressed interest. I'd love to just add you to that list. And in the event I have an opening on something in the future that I think you can get real excited about, I'd love to be able to give you a call and go through that with you. Is that okay? When they say yes, please do that. What are they essentially saying to you?
Yeah, they're validating. They're trusting
you to move forward now in this process. I invite you to call me when there's an opportunity to talk about. So, I put a little note in my CRM, maybe 8-10 days later, what do you think I'm doing? Hey, Michael, Brad Blazar here, buddy. And I check in, I build a report. Hey, I'm going down my list. If you remember the last time I spoke to you, you asked me to add you to my list. It just so happens I'm working on a deal. It's, Naples, Florida or wherever. I don't have a lot left, but if you have 5 to 7 minutes, I'd love to share it with you, tell you what it is we're doing and see if it's something that you might have an interest in. See, now when I send it, they're much more inclined to look at it. But on the back end of that, when I call them back to answer questions, they're much more inclined to move forward because they've already communicated to me on the front end of that validation phrase that there's now trust established to move to that next step in the journey with me.
Now, when you're doing a 506B, sometimes it can happen that you don't have a deal, right away, like you talked about. Yeah. Now, one of the advantages of having a fund, of course, is that you do have something open year-round, which is advantageous. You can manage the process, like you said, and then all of a sudden, you have an opening because you're going to raise another tranche. When you're doing a 506B, you can't always control the timing quite as much. What do you do to keep? And the problem is, of course, if someone calls you. They trust you, they want to invest with you, and you say, I'll give you a call when I got a deal, right? And then 3 months goes by. 3 months is a long time. They got $100,000 to deploy. Are they going to wait around for you? Maybe, or they'll go with somebody else. Well, what do you do, or what can one do to kind of stay in contact with that person while you're waiting for a live deal?
Well, if you don't have a fund and you're raising money on a deal or on a single asset, it's largely about creating a drip campaign or having enough velocity in your deal flow where you can take their capital and then hopefully deploy it fairly quickly. But we have, tons of drip campaigns, emails, blogs, obviously my podcast, the Capital Catalyst Show. We send out a great magazine every other month that's got my picture on it. We use a company called Reminder Media. They have a great publication called Business in Action. And so that goes out. But, the other thing, of course, with a fund is a lot of people are real concerned about having a fund because as they're raising capital, they're like, well, it might be 60, 90 days before we actually buy a property. How is that person going to feel about me just sitting on their money?
Right.
And what they don't realize is that the largest real estate companies on Wall Street, these guys that raise literally hundreds of millions of dollars, when they structure a fund, they tell the investor, you're going to get a preferred distribution and it literally is going to start the very next month. Well, the question is, if you haven't bought a piece of real estate, like, how am I getting a distribution? It's called a return of principal. You see, the biggest syndicators in the country are just sending you your money back. So that first check you're getting, it's a return of principal. Second check you might be getting is a return of your principal. Now in the third month, buy a property. Now there's funds from operations. And so that distribution that I'm sending you is largely covered out of the cash flow. And then I buy another property. Well, if the biggest real estate firms in the country that manage billions of dollars in real estate are doing that, why can't the small guy do it? It's just because they don't know that that's how it's done on Wall Street. And so in our fund, and in a lot of the funds we've helped our students launch, we just say your accountant at the end of the year, when they send out the tax reporting information, is going to be able to break all that down for your investor. But they should start getting distributions literally the next month or the very next quarter, even if you have not yet bought a piece of real estate.
Yeah, that's very good. How do you advise people to find investors? What are the different ways? What's working for you?
There are investors around us all of the time. We just don't have our radar on. I think one of the things is just having a really great elevator pitch. And I think one of the big mistakes, Michael, that a lot of people make is that when they're approached at a meetup or at a networking event and they're asked, what is it you do for a living? You make the very common mistake of actually telling that other person what it is you do. And it doesn't really inspire people to go deeper with you. For example, I'm an attorney or I'm a CPA or I'm in IT sales. Oh, great. They recognize the fact that you probably make a nice living. But I learned from my business coach that really the purpose of a great elevator pitch is to move people forward in a process with you. It's like Grant Cardone says, money follows motion. And so you have to be thinking about, where am I moving this investor's attention to? And so when people approach me at networking events or I'm at a party and they say, Brad, what is it you do for a living? I just smile and I say, man, I'm a freedom consultant.
And they're like, what?
And you look at me like a deer in the headlights. And I'm like, you probably have never heard that one before, have you? And they're like, no. And I'm like, well, I'm a freedom consultant. You see, I'm a real estate entrepreneur. And what I do is I show people how they can basically get away from exchanging their time for money. We call that a job. I help people create true financial freedom in their lives. Matter of fact, next week, I'm hosting a webinar on that very subject. Would you like me to send you a link? Or, hey, I'm doing a live event. Would you like me to send you the invitation? Invariably, 9 out of 10 times, the answer is yes. Why? Because everyone in the world's looking for more financial freedom. Yeah. You see, and so that's become what I call my elevator pitch, but it moves people forward now in a process with me. They're either on a webinar, they're at an event, then I can qualify them as to, are they a potential investor? And if they are, keep moving them forward.
Yeah,
so
I love that.
One, it's having that pitch. The other is also, understanding that there are plenty of places to meet potential investors. Meetups, hosting your own event. One of my favorite, and I've even written an article about this that's in LinkedIn, is going to Starbucks. And, in every major city, you have what I call that wealthy pocket of wealth. And the zip code. Here in Houston, it's River Oaks or it's Bunker Hill. It's where all the 3, 5, $10 million mansions are. But guess what? There's a Starbucks right in the center of that little pocket of wealth. So what I do is I just go there and I camp out. And after I go get my cappuccino, I just give the barista my credit card. I say, for the next 20 to 30 minutes, everybody that comes up here and buys something, you just smile and say it's free today, compliments of the guy sitting right over there.
I love that.
And what I'm doing theoretically is I'm getting in the front door of all those big homes. Why? Because that CEO, that partner in a law firm that's making his $600,000, he's coming there to do what? Get his cup of coffee on the way to work that day. And it is a very outside the box approach to reaching the wealthiest people in town. But guess what? It works like magic. And when I buy them that $5 cup of coffee and they come over and I introduce myself, there's now a sense of commitment, because when I call them back a couple of days later, all I have to say is, hey, Michael, Brad Blazar, I'm the guy you met in Starbucks the other day. Instant rapport. Oh my God, thank you so much, man. That was the coolest thing. And bingo, we just go right into what I do. And if there's interest, great. If there's not, that's fine too. But that's just one of the many unorthodox approaches that I talk about to get in front of real qualified investors.
Yeah, I love that. Now, how does the game change when you get into family offices, private equity? It's like everybody talks about this thing,
Yep.
and very few people actually get into it. What can you say about that? Is it something people should try to get into? Is that more of an advanced strategy, or what's your advice there?
It's definitely an advanced strategy. And what you have to realize is that when you're playing at that league, they're professional investors. They're going to check you out. The due diligence process is highly vetted, and you better have all your ducks in a row. And what I mean by that is they're going to look for things that you may not have just getting started as a solopreneur or in building that small team. They're going to ask you things about your accounting infrastructure, your investor relations, what reporting looks like. They're going to do LexisNexis background checks to make sure that you don't have any pending litigation, things of that nature. So just recognize they are going to do a much higher degree of due diligence on you. But the big challenge is most financial family offices and most quote private wealth firms, are not easy to get into. And the reason that they're not easy to get into is they're managing, in many cases, hundreds of millions and sometimes billions of dollars. And so everybody and the grandma's banging on the front door and trying to get in. And they're very protective. It's a very close-knit society. And a lot of people don't realize the best way to get in is to attend a lot of the events that they go to throughout the year. So now you're sitting down having breakfast with them. You're meeting over lunch or at a cocktail party, and then you follow up after the event where now they put a name with a face. And so, in any given year, there's probably 6 to 8 high quality events that cater to the delegates from these family offices. A lot of times you have the analysts, the chief investment officers there. And so, as an example, one of the probably better attended events takes place in Newport, Rhode Island every year. It's called the Opal Family Office and Private Wealth event. And delegates from family offices all around the world fly in. You got private jets, you got big yachts out in the harbor. But, it's a great place to network and meet people in family offices. And then from there, find out what they invest in and whether you're a good fit. The big challenge for a lot of family offices is they'll just tell you, unless we can write a check for $10 million, don't even bother calling us.
Right.
It's just too small a deal and it doesn't move the needle. We're not even going to bother looking at it. But if you're doing, big deals, multifamily, land developments, you're building high rises where you're trying to raise, 30, $50 million, family office in the private wealth market is a very, very great place to be.
The market is always changing and in various different asset classes, especially in the last 2 years. Markets up, down, COVID here, inflation there, right? Rising interest rates. How are you currently raising capital in an environment where I would say there's probably a high amount of fear from investors. How is your capital? How are you addressing that right now as you're raising capital?
You know, it's funny because right now the alternative investment space has seen more money come into it over the last year than the prior year. And so, people that have money realize my money's always got to be working for me. And if I was smart enough to get out of the market before the market kind of tanked and I'm sitting on the sidelines, I just can't keep that money in a savings account. I've got to put it to work somewhere. So where do I put it? I put it in a real estate deal. I put it maybe into an oil and gas drilling program. Maybe I put it over here with somebody that's got a business. And one of the things that I've learned, basically, getting to know many of the sharks on Shark Tank, like Kevin Harrington and of course Damon John, is so many people come onto the show and they're smart. I mean, they got PhDs, they got good businesses, but they leave the show without a deal. And it really comes down to one word. The word is execution. If you can't convince me as a potential investor that you can execute on that business or on whatever it is you're doing, why in the world would I open up my checkbook to you? And a lot of people are not really good at communicating that they and the team of people they built around them can execute on an investment strategy. And so, we have a lot of people that come to us and say, man, I want to go out and raise $5 million. Great. You're a solopreneur. And so as I look at you, I'm questioning your ability to execute on this. But if you're in your pitch deck or in your website, say, hey, here's my team. I got John. He's my CPA. He's going to handle all of the tax reporting at the end of the year. And I've got Bobby. Bobby's a partner in a big law firm here. He's going to handle all the legal stuff to make sure we stay out of trouble. And I've got Brad, who's raised $2 billion. He's my capital advisor. You see, now the believability factor goes way up here. And now it's like, I see that Michael's not just a solopreneur. He's a real entrepreneur. He's got a team of people around him that are giving him advice and counsel. And I can see that he and his team are going to be real successful. So that's really the secret. It's the ability to convince somebody that you and the team that you're working with can execute on whatever it is you're ultimately doing.
Now, Ivor, tell us a little bit how people can connect with you and some of the resources you have available for raising capital.
I think probably the easiest thing is just go to Amazon and buy my third book, Winning at the Capital Game. It goes into detail, how to attract investors, talks about the different types of investors, VCs, private equity firms, high net worth. The easiest way also is just to connect with me on social media. You can find me on Instagram, just my first and last name, a little whatever symbol, Brad Blazar, Blazar. There's no E's in the spelling of my last name. Or just go to my website, www.bradblazar.com, and shoot us a DM. We'd love to have what I call a capital clarity call with you, find out what you're doing, what you want to be doing, and see if any of the tools, any of the things that we offer, whether it's a boot camp, whether it's one of our webinars, whether it's our actual coaching and training is a fit. But I'm real easy to find on social media and on the internet.
Dude, it's been awesome having your show, Brad. Thanks for being here.
Absolutely. Thank you so much, Michael. It's been a pleasure.